let's start with you, Andre. With your first pick, with your first watch, with your first stock to watch. Let me say it that way. I didn't put up the disclaimer, but let me just say it again for completeness. Any stock, any company, any investment opportunity mentioned here is for education purposes only. And we're certainly not giving you financial advice, but we're giving you the opportunity to learn from what we're discussing. And of course, we recommend that you speak to your licensed financial advisor before you make any investment decision. Over to you, Andre.
All right. So, pretty much, the many times that I would have been invited guests on the Learn Grow Stocks to Watch, pretty much my list hasn't really changed that much. I find that my trading style is a mixture of both buy and hold as well as swing trading. So after I would have done my assessment, top down and the fundamental analysis of the companies, these are I probably somewhat engage a little bit of a trading style. Well, whatever the market conditions will allow. So pretty much my list hasn't really changed that much. So my first pick is TransJamaica. You made mention of dividend investing, and then I think now is that strategy seems to be widely employed under the current market environment. So that would be my first pick, TransJamaica. The stock is over the last 12 months, it's up 113%. On a year-to-date basis, it's up 20%. So pretty much as a screen, I like to look at key ratios, key metrics, and the works, and I pretty much find a lot of the variables to look relatively attractive. It's currently trading at 11 times book value. I believe the market is somewhere in the region of about the broader market is somewhere in the region of about 14 times thereabout. And it actually boasts a strong return on equity of 51.6%. I believe it's able to boast. Part of the reason why it's able to boast such a strong return on equity is that it has high leverage. But then the nature of the business, which is capital intensive and all the works, allows, as I say, sometimes debt levels vary by industries. So notwithstanding the debt levels, when looking at coming, most of the earnings for the financial year ended December 2023, most of the earnings would have been posted. Looking at TransJamaica's earnings, seeing where the debt levels would have declined, would have been reduced. I mean, total assets, would have, gone up, by a decent amount. Pretty much to look at the income statement, there's growth across. We see top line growth where revenues would have increased from revenue. Let me pull up the statement. Well, pretty much revenues would have increased, and I think it's public. Everybody would know that following the GIO acquisition, they would have moved from a net loss position of, I believe, negative 7 million to a profit of 24 million for 2023. So last year there would have been a one-off loss on the acquisition of the subsidiary to the tune of approximately 14 million. In the most recent financial year, that there would have been a non-recurrence of that one-off loss, and as such, they would have boasted 24 million in profit. And as I said, that would have been largely influenced by a very sharp reduction in terms of operating expenses. And the management team pretty much attributed that to the acquisition of GIO, where now being the owner or the majority owner of, they would be able to, cost would be able to be much lower. And then pretty much the toll rates is negotiated or revised on an annual basis.
That's coming up again, right? That's coming up in around June.
Yeah,
correct. Yeah, and then pretty much even from a more organic standpoint, traffic numbers would have increased year over year, and the outlook for the company remains positive. There was an extension for the negotiations for the right of first refusal. Yeah.
I was
I
wondering
believe
what takes along with that one, right? Because the toll was completed like what, August last year, the
last
roadway.
year, yeah, and then now it's been extended to, I believe it's July.
July
Yes,
1.
July 1.
Yeah. So I mean that's revenue foregone for pretty much half, a little over half of the year. But nonetheless, it's my expectation or anticipation that a decision will be made and they will accept that right of first refusal. So from a dividend standpoint, the over the last 12 months they would have paid, I believe is
Well, they
sorry.
paid the 18-cent dividend in October last year, and they just announced a 9-cent dividend.
Yeah, so the trailing, so last year, the dividend in last year would have been that payment for the entire year. But it seems as if there's a shift in terms of the dividend policy. Pretty much going forward, we'll pretty much have to wait and see if that's a shift from a one-time payment per year to quarterly payments, or who knows if it's on a semi-annual basis.
I think it's going to be semi-annual. When I had the interview with Ivan, he alluded to semi-annual, which is why I wasn't surprised to see the 9-cent, because I paid 18 last year.
Yeah.
But I was hoping for a higher dividend than the 9-cent. Really, I was expecting like maybe a 12-cent, 13-cent thereabout. But I know that might have been impacted by the Williamsfield toll not currently being under their belt, maybe, because maybe if that had been, there already, then maybe they would be comfortable paying out more cash.
And just for some context, Jermaine, most companies that actually run the semi-annual structure in terms of dividends is based on the prior 6 months numbers. So, for example, let us say they used the first half of 2023 to determine the 18-cent dividend, and they would have probably used the latter half of 2023 to determine the dividend they're paying out now. So, because I know, for example, and I'm using that something that's been said publicly. I remember, I believe it was Christopher Zaka who mentioned, Sagicor dividend policy semi-annual based on the 6 months performance. That's when they pay the dividend. So they have the Q4, the Q1 dividend paid out in the Q2 period. They go through the Q1, Q2 period, declaring in September. So that it is that kind of half-year structure in a sense. And you see it with JSC, you see it with JMB Group. The JMB Group would have its auditing numbers published by May 31, and by July, August, they declare dividend. Their 6 months would end September. By December, you see them declare dividend again. So TJH probably might follow that same little structure, where, based on the performance in the prior 6 months period, that's what guides the actual dividend payment. Because one thing we have to consider is that while profits might be high, there might be underlying capital expenditures, or at the same time, the company has liabilities going to plan out to pay out in short order as well. So there are many factors to it.
Yeah, I get that. And what I'm looking at really for TransJamaica is, or what I'm measuring them against is that projected dividend from the prospectus. Of course, your yield is going to be impacted by the price you pay. So I hope persons understand that you can't buy at these prices and get the same yield as somebody who would have purchased at IPO. Yeah, let me, I don't know if you're finished, Andrea. I don't know if you had anything else to add to it.
I mean, I have, so pretty much in a nutshell, I think one thing I appreciate with, or one thing that's noteworthy is not only dividend payments or attractive dividend payments, but also dividend growth. So I think before the 18 cents dividends in the prior year were roughly like 8 cents for the entire year. So now they've done 9 cents, on a semi-annual basis. So it's clear where you're seeing dividend growth, where Trans is concerned. I think one thing that we'll probably want to take note of, if you're looking at the trailing dividend, which incorporates the full year dividend last year, as well as that interim dividend declared recently. My numbers suggest a yield of 8.28%, and that's at a price of 323. So anticipating that will normalize, we could see a case where the dividend yield probably is revised downwards to maybe have a yield around 5 to 6%. So I think that kind of forward-looking analysis would probably be useful, and just so one doesn't get led astray in terms of the trailing dividend. But in a nutshell, that's my review for Trans.
Okay. I mean, I hope they don't become an average dividend paying company, because otherwise it's not gonna be as attractive for me. I'll just say that because I think the company is structured to pay dividends and nothing else, right? So, I mean, of course, it is the kind of company I think that if you're a dividend investor, it's kind of an obvious one. But yeah, I just hope they don't fall into the pack and become average. Now, again, that all is based on the price. If the price is at $10, then the yield may very well be like 1 to 2% or something like that. But you get the idea. So Matthew, you're up. Or if anybody has anything to the negative of for Trans, not necessarily negative, but maybe something not mentioned before, some other side or alternative that may be worth mentioning. If not, then Matthew, you're up.